Welcome everyone to this Freight Market Summit Fireside Chat. I'm Thomas Wasson, trucking expert here at FreightWaves, and we're going to be talking about the markets of all things, of course, and super excited to be welcoming on our guest shortly. It's Todd Waldron. He's the Vice President of Carrier Experience at Truckstop. And, this is one of those great times of the year, having a summit right at the end. We get to talk about what the heck's been going on, and we'll be talking about what to look forward to. So without further ado, let's pull in Todd. Welcome, Todd.
Hey, Thomas. Thanks for having me. It's pleasure to be here.
Yeah, it's a pleasure. It's good getting to catch up. This is the best part of the job when you get to not only are we going to learn some information, but we get to touch base and everything.
Yes, get to check in. I like it.
So before we dive in, tell us a little bit about your background, what you do at Truckstop, and then we'll get to business.
Yeah, the years continue to fly by. I'm now at 18 years in the transportation industry. Grew up at a large broker, C.H. Robinson, worked at J.B. Hunt for a while, and then ran an asset-based trucking company, Q Carriers, out of Minnesota, that had a brokerage division as well. And then earlier this year, the beginning of this year, I joined Truckstop.com. So now Vice President of Carrier Experience, and just get involved in all things carrier customer experience related, really diving into what customer success looks like. I actually just got off our carrier advisory board meeting, getting a ton of feedback from them and a lot of great ideas. And so it's a great pleasure to be at the company, and it's been a joy to be working on the technology side of things. So.
Well, it's always the fun stuff. The technology is where it's at, and especially technology for rate information, market data. And that's one of the big things. Talking about the rate outlook, let's dive into, we've recently finished up Thanksgiving. This event is before Christmas, so we're kind of in that transitory phase where we hope things go up. But for listeners and viewers who may not have been paying attention to kind of what's been going on over the past few weeks to months, let's do a catch up here. Tell us what you all have been seeing on your side.
Yeah, absolutely. I'm watching it frequently and weekly, and it's like you never know what's going to come up. It's just been an interesting year to say the least. But Thanksgiving, from a calendar perspective, was off a week, so that kind of was something to keep in mind as you're looking at the data. But overall, volumes are down last week, which is expected, right? A lot of people take off. We also had winter snowstorms up here in Minnesota and some other states of the Midwest, but we did see dry van rates spike up, jump 13 cents week over week. And so that was a positive sign. We saw strong positive momentum in the rates. And so that was beneficial. Flatbed was essentially flat, and then reefer rates dropped slightly. We just, as you look at the MDI and the load to truck ratio, we saw a significant drop in that. But like I said, that's expected, and so it's a typical holiday compression that you'll see. So it was encouraging to see a meaningful rate boost, especially on the dry van side. It sounds like the retail season was especially strong. Black Friday and Cyber Monday were very strong from what I've seen. So that's a positive. It'll be really telling to see what comes out this next Monday in the data, to see how then this week responded following the holiday.
That's one of the big conversations has been, will we see seasonality? Because, this is about 2 years now since 2023, I'll wager that, after COVID, after things have settled, it's been one of those things where, I'm just happy to see things are better or seasonally performing compared to years prior. That's got to be one of those good feelings where, things could be in a better position for carriers, but at the same time, at least we can somewhat predict something compared to anything before 2022 through 2020 to 2022. Really just take about a data set.
Yes. Yeah, that has been encouraging. You see the reflection of seasonality happening, that makes it like, okay, there's some normalcy, which we all need in these lives that we're living, because I'll tell you, these last few years have been anything but normal.
Let's talk about looking ahead to Christmas.
Yep.
Seasonality says eventually things will continue to go back up. We've seen historically sometimes it goes up over Thanksgiving, it lulls, it goes back up. We're trying to predict the shapes and the movements. What are some of your early impressions? I know we're kind of early in the ball game right now, and even for listeners at the time of this event, it's still going to be in the early innings. But what's based on conversations and being on the carrier experience board, anything you can kind of share with us anecdotally to help support some of these predictions moving into peak.
Yeah. It's like there's these, it's like everything that's happening, there's two sides to the equation or to the coin. It's like, yeah, we have strong retail sales, but credit card debt is up, right? And there's some conversations of buyers kind of buying less or smaller gifts or lower amounts of gifts and things like that, or being very price conscious on what they're buying. And so, those two are kind of playing against each other. But as I look out, past Christmas, one of the few things I look at, one, from a transportation perspective is the weather. And so Minnesota's had two very easy, not much snow winters the last 2 years. So I feel like we're due for a snowy year. And reading the Farmer's Almanac, it kind of reflects that cold temperatures and precipitation. That can have this impact that's unforeseen in transportation capacity as we get into the new year. And get through Christmas. The other then is obviously all the immigration policies and talk about what's happening with immigration and what's happening out in California with the removal of, I believe it's 44,000 CDLs, and looking at how that's going to impact capacity. And then you have this long stated market decline that we've been in, where there's so many carriers that are just holding on the edge. And if we see more momentum of carriers going out of business or being acquired here at year's end, could be other things that impact capacity. And so from an economic standpoint, there's talk of potential soft landing or potential recession next year. And so that's a negative on the demand side that could hinder and drag out this recovery. And so I think we could see some, because of weather and other things, we could see some disruption that start to bring rates back up and push back. But I think meaningful recovery, I'm hoping for a Q2 and kind of starting to see actually meaningful momentum going into the end of the year. But like I said, there's these counterbalances that are taking place that it's very hard to predict.
Well, it feels like it does feel like trying to read the tea leaves. It
It
reminds me of
does.
this Mark Twain quote or somebody, maybe Mark Twain stole it. It's like there's good news and bad news. People can't figure out which is which. So we've got this news. We've got this structural assault on non-domiciled CDLs and fraudulent CDLs. We've got attention on these schools that produce some of these drivers. We've got macroeconomic headwinds and whether the big beautiful bill actually stimulates it because I can write off stuff, or if interest rates. And so that's one of the big things when we're trying to like hash this out. Let's look at the capacity side first, looking ahead, then we'll dive into the demand. Do you think there may be a situation? My personal opinion, I'm gonna preface this, is we know something's gonna happen, we just don't know how or when because everything's fuzzy right now. What are some of your thoughts? Because I feel like it's an upstream or chicken or the egg. Do you catch all the drivers and does that take capacity out? Does the threat, or does the schools feeding the beast that turns into capacity, kind of like the chicken, is that going to be the thing to watch? It feels like it's all over the place.
Yeah, absolutely. And some of them have a nearer term impact, and some of them are a more prolonged impact, right? Like the CDL schools, if you take out schools, you don't necessarily see that impact happening for a few months to even a year of new drivers, coming in. That's kind of a prolonged, delayed impact. Drivers still have to go through training, where you would hope go through training and be onboarded and ride with another driver. So there's some potential impact there. The new CDLs not being issued has also kind of a prolonged, delayed impact. But taking drivers out of service, there's two conversations of how many drivers are really being taken out of service versus just getting a ticket if there's enforcement happening. And so that's a more immediate impact, but it hasn't been really quantified yet as to its potential impact on rates. So I try to categorize and segment each of those components. and look at is, together, I believe that it's going to be just more pressure on capacity over the midterm to long term, to the middle of the year, and that it's not anything that's going to drastically change rates or switch capacity, overnight, or it's going to be a more longer prolonged thing. And I also think what happens in transportation is you have multiple forces that then work together. And so I don't look at it as any one certain aspect or any one certain thing that's going to make the meaningful impact. What is the pressures on trucking companies that are struggling. The former company I worked with, we ended up divesting the assets and selling the company as it was changing generations. A lot of these companies that started back in the 80s, 90s, when you had an influx of capacity coming in, they're changing generations, and not every generation wants to take over. And then you have this immigration policy. So all these things working together, I believe, is going to be this pressure. It's just hard to quantify which one will impact how much, and can you even understand the underlying impacts versus what we perceive or the talking heads want to believe. But
that's the challenge, because it reminds me of like the weather. It takes a lot of conditions for a tornado, but it's easier to get a thunderstorm and it's much easier to get a rain shower. And so we're thinking of this cloudy outlook for trucking capacity. We know that there's clouds. We know that we're feeling some rain, but I don't know if I need to start worrying about if my windows are shaking. Shout out for my buddy from Oklahoma. He said that's how you know the tornado's close. It's so flat, your windows start shaking. We don't know if the windows are shaking yet. So let's switch gears so we know there are some structural supply constraints of trucking capacity. We know that this should theoretically into next year mean that it will be harder for capacity to meet demand. But on the demand side, we've got this situation where if you look at tender volumes and other data sources, it's more like 2018, 2019. So we have muted demand. Do you think there's any kind of adding into this perfect storm of ingredients, whether we're going to rain or tornado? Is there anything on the demand side or anything on that truckload side that you're looking at volumes wise that may tip your hand to the extent if it may be a Q1, a Q2, a Q3? What are some of those ingredients we need to be paying attention to as well on that end?
Yeah, I see more of the correction going to have to be driven from the capacity side. I think as I look at the demand side, it's like we're in a transportation weak economy. So even if there's a good economy next year, there's still little trucking growth that might be associated to that, as our GDP is spread more into technology and other non-shipping related areas. And so then you pile on this potential risk of a recession around mid-year, is some talks that are going on. And so I would hope, or it would be great to see some influx in demand. But I think there's a lot of things that are kind of working against that right now, that would be a challenge. And so if we see a meaningful downward shift in demand, I think that's a huge negative, because then you have to remove even more capacity. But like I've seen, it's like demand has been stable to pre-COVID levels in a lot of ways, in a lot of areas. And so I think that it'll be a key to maintain that. I don't know if we'll see much growth on that side next year. But that's just kind of my perspective.
And let's talk about the technology aspect here.
Yeah.
With this uncertain, cloudy outlook, one thing you can do is work on oneself. Can't control the things around you, at least work on oneself. If you're a trucking company, shipper, broker, technology is a solution. Do more with less. Talk about what Truckstop has been up to. Y'all have been making some moves, purchasing Denim. You got yourself a new pair of jeans. But tell us a little bit about what y'all been working on this year, and then let's dive into some of the technology trends that you're seeing.
Yes, that was a great acquisition. Well, in the process of integration, it really helped to round out our factoring services and enable us to be able to provide better customer service and more efficient in the factoring space. Also open up the door for broker factoring on top of carrier factoring. So it was definitely a cool addition to the team for sure. We're also really focused on, so Scott, the big talking point was Scott Mosscrip coming back, our founder coming back into the CEO seat, and the momentum in the product space that we've been working on. So releasing a van specific load board, so that it's tailored to the van experience and makes for a much simpler experience to find loads, and includes the sonar rates within the load board, both at a lane search level, but then and also in a more detailed load specific level to provide more insights as to what's happening, both from a rating standpoint, but then also supply demand for the market that you're leaving and the market you're going into. So that was something that was a big release, and it's setting the stage for more mode specific, load board development to be able to be more tailored from a pricing standpoint, but then also a feature and a partnership standpoint. So the Sonar partnership was one example, but as we talk about other modes, there's other partnerships that enable more flexibility, more functionality and efficiency for our carriers, and the ones that we work with. So that's one example. And then private loads is a big thing that we've rolled out, and then we're growing and developing further. Because as the industry's changed, right, brokers have focused more on relationships, carriers have focused more on relationships. As fraud is rampant in the industry, it's more important than ever to work with people that you know and understand, from a relationship standpoint. And so private loads enables brokers to make loads visible only to the load carriers that are already approved and onboarded with them, and then select a period of time where it goes to the wider Truckstop ecosystem. And so that's a lot of what we're have going on. And then obviously, there's this new thing that's out, artificial intelligence. I don't know if you've heard about it, but we're obviously there's a lot of different veins we're talking about that in. And so kind of leading up some aspects of it on our customer success side and customer service side, but then also what's that look like for our carriers, for our brokers? How do we utilize that to make them smarter, make better decisions? What are tasks and responsibilities it can replace that are more automated or repetitive, but then also in the tasks that brokers are so responsible and necessary for, and drivers are, how do we enable them to be smarter and quicker in their decision making? So that's just a little bit of some of the things we're working on, but we have some stuff coming here as the new year turns that we're going to be rolling out and releasing. So it's a pretty exciting time.
Well, the two big points, the partnership is fascinating because when I first started, I started at FreightWaves back in 21. I've been trucking since 14. Partnerships was kind of, everyone used to just build it on their own. Everyone's like, I'm going to build my own TMS and load board and structure and everything. And we're seeing this gradual thing where folks are wanting to do more partnerships. It's more holistic. Everyone's willing to share. The private load board being one great example. Like when I was at US Express, we'd have private load boards with maybe through a transplace or the shipper itself, but I never would have dreamed that a carrier would have that capability with 5 trucks when it used to only take 5,000 trucks. So looking into 2026, instead of AI, I want to postulate this to you: data democratization. Do you think that we will start to see this scenario where instead of it used to be these closed loop, this walled garden that despite the fact that there's demand questions and capacity concerns, folks are willing to share more, so everyone kind of wins, which is like cats and dogs making friends in this line of work.
Yeah. Yeah. I think, I don't know the path, to get there. But you definitely see momentum heading in that direction. Technology has enabled more seamless and secure sharing, as well as intuitiveness on protecting certain pertinent or important information, so you can share different aspects of the data without sharing all of it, right? And so that those are things that enable more of a way of kind of sharing. And so you look at whether it's Truckstop or other, there's been different ways that a Truckstop sits in between, and enables someone to share data without giving it directly to a competitor, but then to make it a collective and provide value to all the parties that are involved or a part of it. And so I think we'll continue to see that. I think people are being more and more, I've been brokers I've talked to that I've worked with, they're more and more likely to have friends in the industry rather than enemies, and are rather to have co-opetition than competition in a lot of ways. And so I think that's also an underlying momentum where people are realizing the benefit of working together. So
And we may finally see peace in our time between freight brokers and carriers.
yes.
Well, Todd, really appreciate your time. Speaking of which, thank you so much for hopping on and talking with me. If folks want to learn more about Truckstop and check out some of the stuff you all have in the pipeline, what's the best way to get more info?
Yes, truckstop.com, obviously. And then myself, I'm on LinkedIn. We have Truckstop, our profile on LinkedIn as well. And those are some of the ways you can kind of get started and get connected.
Beautiful. Perfect. Well, we'll catch up again soon and really appreciate your time.
Awesome. Thanks for having me.
That's going to be a wrap for this fireside chat. But don't worry, folks, we have a lot more great content coming up at this 2026 Freight Market Summit. Stay tuned.